Hey, it's Ryan Gillard here at Real Broker, and I'm just going to go over the monthly market stats and let you know what happened in January for Calgary real estate. I'm just going to read the first paragraph here. I think it sums it up quite well. So, following 3 consecutive years of limited supply choice, inventory levels in January rose to 3,639 units. While the 70% year-over-year gain is significant, inventory levels remain lower than the 4,000 units we would typically see in January. Inventories rose across all property types, with some of the largest gains driven by the apartment-style condominiums. So our sales, they're down from last year. Our inventory is up, but we're still doing quite well if you look at Calgary, how it performed the last decade or so. Supply is up, but it's not evenly distributed. So for single-family homes, duplexes, they are doing quite well, and you are seeing a bit more inventory come to the condo market compared to the single-family market. And we're seeing excess supply for condos. That is making the market slower, more of not a buyer's market yet, but it's definitely more balanced than it used to be. And that's good news if you're a buyer. Interest rates are coming down and there's more inventory. So for sales, we had 1,451 sales in January. Now it says 12% year over year decrease, but this is still very good for a January. We're definitely well above long-term trends. So I'm not too concerned about this. New listings, we had about 2,896 new listings, up 35% year over year. This has been happening the last half year. The trend is definitely more listings, more inventory. For inventory, there are 3,639 units on the market. That is up 68% over last year. And the months of supply is 2.51. This is the stat where if no one could list a property for sale, it would take 2.5 months to sell the remaining inventory. And this number is up 91.6% year over year. So that is a whopping increase, but this number is still very good. I would say this is still a seller's market for the most part at 2.51. Once this gets to like 3 or 4, then it's more of a balanced buyer's market. So it's still very good. 91% increase. We went from like nothing basically to this number. So it's not that alarming. The total residential price in Calgary across all product types is $583,000, up 2.8% year over year. So definitely the prices are starting to flatten out. If you look at previous months, this number was like 20% year over year. So the pricing has started to level off in Calgary. If you are looking to sell and you've been kind of thinking about timing it and pondering it, now might be a good time to cash out. Looks like prices are leveling off somewhat. Again, it depends on which product you have, the neighborhood, how much competition there is. So lots to take in. But if you are on the fence and you're looking to sell, it could be a good time. Detached homes, average price $750,000, $800,000, up 7% year over year. Now, if you have a detached home that's maybe in the average to below average price ranges, I would probably hold on to it because that sector is still very tight. So again, it does depend on what property you have in the neighborhood and all that sort of thing. Semi-detached properties, these are duplexes, average price $673,600, up 8.3% year over year. Townhouses, $444,000, up 4.9%. And apartments, $331,400, up 5.3%. And one thing I should have started off with, it is February the 3rd, and we have looming USA tariffs that could be coming to the Canadian market, 25% tariffs, which would be very, very damaging to the Canadian economy, and it would definitely affect the real estate market all across the country. So that's one thing that you should make note of. I don't know what's going to happen with that, but it will definitely have some kind of impact on the real estate market, and it won't be good if these tariffs do take place. And in this section here, I'm not going to go into it in too much depth, just to summarize it. The general theme still is that we're getting more inventory. The market is starting to balance out a little bit. For the detached homes, I think if you're around 700,000 or higher, the market becomes more balanced. If you're below that, it's more of a seller's market as affordability is still an issue, and affordable detached homes are definitely in high demand. And for condos, we are getting more inventory. The market is definitely balancing out, so you're going to see expired listings, price reductions, and stuff like that. It's still a good market. You can definitely sell. You just need to make sure that you're priced right, the home shows well, and you just kind of follow the plan, and you can definitely sell still. Across the city, I'll just give you a snapshot of pricing. City Center, 587,400, up 1.1%. A deceiving number because a lot of condos are in the city center. But if you're looking at detached homes, you'll definitely find a lot of properties over $1 million in the city center. West Side, 708,700, up 4.3%. Northwest Calgary, 634,600, up 3.4%. And North Calgary, South and Southeast, always around like the average price ranges, 577, 576, and 548 in the north. Northeast and East Side are the most affordable parts of Calgary at 509 and 434. And lastly, I'll just give you a snapshot of the total sales. This is across all product types. What happened in January versus what happened last year, just to give you a quick little breakdown. So last year there were 1,649 sales. This year there was 1,451, down 12%. New listings up 35%, 2,896 versus 2,100. Inventory is up quite a bit, up 68% to 3,600 units versus 2,100. Months of supply went from 1.31 to 2.51, up 91%. I won't go through all these stats, but here's another good one. Sales to list price ratio is dropping. It was 99.88%. That means the seller could almost expect full list price. This has dropped down 1.3% year over year to 98.55%. Days in the market is going up, 41 days versus 34. All these stats just show the market is definitely balancing out. There's no mistaking it. It's going from a seller's market to more balanced conditions. Benchmark price, 567,200, up 2.79% to 583. The median price, which is my favorite metric, 523 to 572. And the average price, 569 to 605. That's just a good quick snapshot of what's happening in Calgary. Again, these tariffs, they might wreck the Canadian economy. I don't want to scare people, but it's a real threat. It could definitely make things a lot worse all across the country. If you are thinking about buying or selling and curious what all this stuff means for you, feel free to give me a call, shoot me a text, send me an email. I would love to help you out, and I will see you on the next video.